Okay, guys, in this video, we are going to go over the one and only stock you will ever need to trade with and it has been like this in the past forever. Interrupt the video. If you are new to the channel, there is a free, 100% free, cost you nothing PDF on how to sell options below. All you gotta do is click the link and get your free PDF. With that being said, let's get back to the video. Okay, guys, so I got the screen up here and you guys see that I had the futures open. So this is something that not anybody ever told me until years and years and years later. But these open on Sunday, actually. So if you want to know where the S&P is going to be at in the morning and roughly kind of where it opened at night so you're not delayed behind everybody else, Sunday night, check the MES for the ES. MES is just a smaller version of the ES, but it all tracks the S&P 500. We have oil, crude oil up here on the top right, MGC, which is gold in the bottom left, and then M2K, which is the Russell 2000 in the bottom right. None of these is what you're going to touch, but you could. MES is actually going to be the exact same thing, except for futures version of what we are going to look at. The only one, and I'm not going to keep it to the very end, is the S&P 500. So whether that is SPY, the actual SPX, the futures MES, or the bigger future ES, which is /ES, all of it. It's all the same thing. It's all the best 500 companies in the world. And now you're going to instantly go, well, I don't have the money to be able to trade that. You're wrong. Or be able to invest into it. Most of you are new to my channel, but the only thing you really need, and the easiest part about all of this, is Robinhood and all these other brokerages and everything else. Again, if you're starting, you're probably starting in Robinhood. I don't blame you. It's super easy. It's free. There's no commissions unless you're trading in options. They're still super cheap. Not like when I was trading, when I was starting, I think I traded $7 to enter and $7 to exit. It was $14 before you even made a penny from the stock. We even lost a penny on the stock. So S&P 500, again, a lot of people are going to start with the SPY. It's the easiest way, again, to just buy shares. If you don't want to do anything, you don't want anything extra, just continuously buying the shares. Now, over to the right, I have an options chain. We're going to show you how you can also be able to make money off of the derivatives without having a ton of money. Pretty much everybody in the world has $100, no matter what. If you only have $100 and you aren't able to eat and everything else, you probably shouldn't be watching this video. You should be trying to figure out how to make money elsewhere and stuff like that. But everybody else that's here has got $100 extra. They want to start investing. Now, again, I am not a financial person. When it comes to it, I have no letters behind my name. I only trade my own money. There's no hedge fund in back of this. There's nothing like that. It's just how I manage my own money and how I've been able to grow it over the years. But the S&P 500, guys, it's the simplest thing in the world. Go buy the market. It's what your 401k does, except for they take fees on it. And yes, they do take fees. I guarantee you they take a fee. They take a percentage from management. But look at the S&P 500. Look at the chart. Why would you not buy that? I'm just saying, but we're at all-time highs right now, and if you're looking at the overall market, it's probably going to have a chance of coming down. Everything has a chance of coming down. We could go to a bear market. AI could scare everybody. That's not the point. The point is, the easiest way if you're going to get started with $100 is just go buy the S&P 500. Now, if you want to generate income off of that $100, that is a different story. There is risk involved in everything. Everybody needs to know that. There's risk involved in absolutely every trade you take. But my favorite, for starters, if you just have to trade options. No matter what, for some reason, everybody tells you you're going to get rich trading options. I'm going to show you the smarter way to do it without having to have a lot of money, but with a higher probability and not having to risk as much. So this is an options chain over here on the right, and it is linked to this chart over here on the left. I'm going to go 40 days because I think 60 days is too far. I like the 45-day, but I'll go closest to it. I'm going to go choose 40 days. Guys, if you have 100 shares of this, go sell a covered call. It's going to generate income every single week. I don't blame you. Again, now this strategy, guys, is not day trading. A lot of people are going to instantly be like, well, I want to day trade, and I've day traded. I took trades on Friday. I still make money doing it. It's just not what I would recommend to an absolute beginner. It's hard, it's emotional, and you got to be used to that. So the number one strategy that I'm going to tell you is run credit spreads actually far enough out of the money that you have a high probability. I'm going to give you the secret though. And the exact secret that I give to anybody that's ever asked me, well, what happens when you take a big loss on credit spread? Because you've been putting up $100 in credit, or you're putting up $100 in general, but you don't want to lose. What happens if the actual stock market does fail and it collapses and everything else? We're going to put some golden rules on this strategy. So I have a probability of out of the money over here. You can change this to however what you want to see up here. This is just what I want to see. My internet for some reason is being slow, but I'm going to come over to this 85%. So I'm going to sell this option. You're going to see I can actually sell the option. I do have the buying power for this if I wanted to. Oh, I don't in this one, actually. But the exact same thing what I'm going to do is I'm going to buy the one right underneath of it. So 659, I'm going to buy the 658. And you're going to see we're going to create a spread. And the spread is what you can make. So the biggest thing here is you are going to make $7.92. Now, you probably should be going for about that $8. Again, but it's taking out commissions and everything, so 7.92. You may only get filled for 7. It's not going. We're just going to key it in for 7. This is still 7% on the collateral that you required is $100. It's not a bad trade, guys. Stay with me here. And here is the biggest kicker and what makes it such a high probability trade. If you've made it this long in the video, you're real and you really want to learn how to do this. So 659, I'm going to go find this and I'm going to go make a line. 650, see how far down this is? Holy crap, 660 is way down here. I'm going to basically put it at 660. So in order for this trade to lose, the entire market has to fall from all the way up here below this in 40 days. Now, can that happen? Absolutely. That can happen. COVID happened, everything else. Anything in this world can happen. But the golden rule is if I collected $6.92, so we're going to round up to $7. My max loss on this trade, I'm going to round it up to 15, basically double my credit. So $6.92 is my estimated credit. If I get filled here at 7 cents, so $7 is what I'm actually getting, I'm okay with getting $7. And I wait 40 days and I collect a 7%. Actually, it's like 6.5 after fees and everything, but whatever. And so I get my 6.5% in 40 days. The stock market does 12% roughly, and actually I think it's only like 10% roughly annually. Like, that's a big difference. Now, is it risky? Absolutely. You don't hold any equity. All you do is you hold these options. That is very true. But if you want income, these are the risks you have to take. And the reasons why we have these rules is I'm not willing to risk all my $100 either of this thing actually falling. So if we do get a big red day, and by the way, a golden tip here is to be selling these on red days in the S&P 500. You will get further out options for the same delta, which is the probability of out of the money, and you'll get more credit for them, actually. So instead of a $7 credit here, maybe you're getting 8. Maybe you're getting 9. You might even get 10 if it's a real bad day. But that's neither here nor there. That's just a pro tip. The whole market actually is, like I showed you at the beginning of the futures market, is down tonight. So this isn't a trade that you're going to take. These are actually false numbers. It's just delayed because the S&P 500 or SPY does not open. Options don't open until 9:30 Eastern time or 8:30 Central Standard Time, like myself. So this is a very, very high probability trade. Now you add in the max loss that you don't allow it to get to, obviously, because $100 is your max loss, but our max loss is going to be $15. And sometimes you will hit them. That's fine. But law of large numbers is what's going to keep you in the game and keep you making these. And if you're like myself and I started doing these and I didn't have a ton of money, but I wanted to start generating a little bit of income on my own when I was 18, 19 years old, and I was day trading every single day and I started to stack some cash, I had about $1,000 every single week on these. So I stacked them. One week I'd have $1,000, and the next week I'd have $1,000, and so on and so forth. And then all of a sudden I was making anywhere between $80 to $100 extra a week as that grows. Was it risky? Yes. But I had these rules, and that's where I came up with these rules, because I did have some of them that really hit, and they hit really bad, and they hurt. Power of just learning, and it's part of tuition. But with these golden rules, this strategy does pay dramatically different. Go look at an equity curve of somebody that puts this exact strategy into place, starts basically tracing these out every single month or every single week for that weekly income. And I guarantee you it's going to outpace the market. COVID is going to hurt, but you collected more premium and you got even further out if you were selling options during that time. Myself, I didn't sell options. I was just buying the SPY at that point in time, and Amazon and Google, and made a ton of money on the way up. I think everybody did. But this strategy is if I only had $1,000 back in my account, or $500, or even $400, for instance, I would be doing $100 a week here, making $10 extra a week, getting it floating out, and then again, saving more money to start adding layers on top of it. That's what I would do. That's what I did in order to start generating income every single week in my accounts. And I still do things like this. I still have an account that does this. We do covered calls. We do all of these other things. And again, if you start getting to the point where you're making even more money and you like this option, instead, we can get $5 wide. And you'll see instantly the collateral changes to $500, but now I'm only collecting $35.92. I don't love that as much personally, but it's still pretty decent. For $500 to collect $35.92 in 40 days. And here is the compounding effect that nobody else is going to tell you. You're more than likely not going to hold these for 40 days. A lot of times I'm holding them for about 20, sometimes 15. It really just depends on how the market's moving and how it's balancing and moving around. Again, the markets move every single day. You're going to see these options move up and down a little bit here and there at all times. This is one of those things that, again, I like the $1 and $2 kind of spreads. I don't love 5, but if you need to, you always can. Again, I'm looking more probably right around in here. I really like these ones better. As you're going to see, it's the same percentage, the $200 collateral, but once you start putting more into these, the less trades that you have to take, the less amount that you have to worry about getting filled and things like that. This is a very, very highly probability of winning, with the fact that having income coming in every 40 days. So with that being said, thank you guys all for watching this video, and I look forward to hopefully helping somebody out there.